Oh, absolutely. It's a 1:4 ratio that we're seeing for the advanced decline. So that really shows you the extent of the damage in the markets today. Let's talk about some of the individual spaces. Of course, we've mentioned the banks. All of the Nifty bank constituents are in the red, but let's bring a few of them up. Of course, IndusInd Bank is suffering, the biggest blow today on the back of news flow that came through. But pretty much the entire pack, even if you look at the smaller banks, something like a South Indian Bank, Karnataka Bank, all of these seeing some sharp cuts. It is actually the Nifty Auto Pack, which is the biggest sectoral loser today. So it's down almost 1.4%. Also, a lot of the auto ancillary companies, of course, Mahindra CIE and Sona BLW on block trade. So those are up for you. But a bunch of the others, so take a look at Samvardhana, you have Uno, Minda, a bunch of these are under pressure. In fact, the Nifty IT is holding up pretty much only because of what's happening with Tech Mahindra. But a lot of the larger names, like you can see on your screen, have slipped into the red. Now, they were holding up for, a better part of the morning, but they have slipped into the red right now. So that is one space to watch. And like Nisha was pointing out, the Adani group of stocks as well. But that's what's happening with the market action. Let's start the show with the big newsmaker over the weekend, the collapse of Silicon Valley Bank. Only a couple of days after the collapse of the startup-focused lender, crypto industry lender Signature Bank also shut shop on Sunday. Now, U.S. regulators stepped in to prevent the contagion and systemic panic by announcing a plan to backstop depositors with both of the banks, so Silicon Valley Bank as well as Signature Bank, who will now have full access to their deposits. The U.S. Treasury, Federal Reserve, as well as the FDIC in a joint statement said that no losses associated with the resolution of Silicon Valley Bank as well as Signature Bank will be borne by the taxpayer. They, however, stated that shareholders and certain unsecured debt holders will not be protected by the regulators, and that they also said that they will make available some additional funding to depository institutions in order to assure that the banks have the ability to meet the needs of the depositors. So that was some news flow that came through, which sort of was a big relief for the market as well. But let's listen into some comments from Jeremy Siegel on the SVB fallout and how he sees the markets moving from here.
SVB changes the entire